Hi, it's Wayne from Truth About Mortgage Rates and WFP Mortgage. Back again, touching base from our last conversation about Fannie and Freddie. We said that something was going to happen, and it definitely did. Treasury Department, government came out over the weekend, really in a special news conference to be able to calm the market before they opened up on Monday, to say that they were there to essentially bail out Fannie and Freddie. Again, however we want to put the words, providing a backstop, so that Fannie and Freddie are not failed, or the perception in the market that they're not going to fail. Because that really is what this is about. It's about a crisis in confidence in the markets and investors and how they feel about Fannie and Freddie. Because right now, they don't need any of the actions that would be put in place, whether them having to access the discount window, having to get loans from the government even coming in and potentially buying stock, buying a piece in Fannie and Freddie. None of those things are required or needed right now. They are just absolutely fine. There are no problems. Delinquency is still very low. Now, you can see things coming down the road. Yes, delinquencies are going up. Yes, foreclosures are going up. But even when you look at all of that, they're still in good shape. Some people are throwing around numbers of $500 billion, $1 trillion that are going to be bad loans. Now, frankly, I think those numbers are put out there just to scare people. It's just throw it, oh, it's going to be all this. Taxpayers are going to owe all this money. And it's just to scare people, and it gets people noticed, gets them on TV, gets their newspaper written or whatever. When you actually look at the real numbers, look what would go on, even if the government had to guarantee a large amount of bonds, they're only guaranteeing, again, that bond, and they would have to lose everything on that for the government to have to come in and be responsible for all of that. Now, there may be some losses on those bonds, but you're not going to lose everything. Is every mortgage and every property in the United States going to be worthless? Of course not. Now, if Fannie and Freddie failed, there's a greater chance of that whole scenario coming close to being true if they actually failed. Because right now, Fannie and Freddie are the mortgage market, which in turn is the housing market. And we're in trouble enough as it is. If you ever took out Fannie and Freddie, the housing market and the mortgage market are done. And that would actually take our economy and the global economy into a tailspin. And we really don't even want to think about what that would look like. So this is something that had to happen. Even if we think, well, gee, we don't want to spend money bailing out people, made bad mistakes, all well and good, unfortunately that has already happened. We need to move forward, and we can deal with it in the future to correct the problem, but right now we have to take care of really the extraordinary situation that we're in. I'm not for government bailouts, but again, we are in extraordinary situations, and we have to deal with extraordinary situations by extraordinary measures. Now, we'll have to wait and see exactly how the final plan looks. It may change as they're going along here, because again, Fannie and Freddie don't need it right now, but we'll see how it looks, come back and discuss what it may actually mean and what changes there may be coming down the road and what it may mean for all of us as Americans. Now, the next topic we're looking at, IndyMac Bank. IndyMac Bank failed last Friday. FDIC came in. It opened back up under FDIC control on Monday. Now, the situation with IndyMac, again, they were in trouble. They had a lot of bad loans, so they weren't in great shape, as other banks aren't in great shape, but IndyMac more so. But we had Senator Chuck Schumer come out and had made comments about questioning their strength. Now, that then spooked people to then go get into an old-fashioned run on the bank. Start withdrawing money out of the bank, that hurts the liquidity. That's what can take banks down. That's what sent banks down in the Depression, is people having a run on the bank. So that caused the big problem. It made what they were talking about become reality. Now, would they have failed without that situation going on? Maybe, maybe not. They still would be in trouble, but they may not have failed. Now, people have been saying that we've needed to have a large bank failure to kind of get this whole situation out of the way. Again, we do have to get rid of the weak. That's the only way that the economies are going to move forward, to get rid of the weak, the strong survive, and this may be just part of that purging process. Well, we'll be back to take a look at how these situations unfold and how the changes may or may not affect you. Meantime, check out our free report, Truth About Mortgage Rates, at truthaboutmortgagerates.com, and also watch for our upcoming announcement of a brand new website where you're going to be able to go and ask your mortgage questions and get them answered by mortgage experts. See you next time.